Hello, everyone. I am Chuki, and I'm here to tell you about Remittance Reimagined. That's going to be our talk for the Financial Inclusion Week from Kaoshi, where we will tell you about leveraging open finance APIs for transparent and cost-effective remittances. We are honored to have been given the opportunity to present this idea and innovation in the Center for Financial Inclusion's Financial Inclusion Week 2024. So let's get into it. Immigrants pay a premium to support families living overseas. There are about 272 million immigrants in the world. They're sending over $860 billion to families, friends, supporting loved ones. They are the lifeline for many families back in emerging and developing countries. 860 billion is sent annually. It's estimated that about $250 is sent on average each month by these immigrants. So it's a significant lifeline for a good number of families back in their home countries. We have an estimate that over 700 million families are supported by these immigrants. But the cost of cross-border payments are a huge concern when we think about these international money transfer transactions. When we think domestically, in many of the countries across the globe, local domestic payments, because they do not involve any change in currency, end up being free or near free for most transactions. Here in the US, we have Zelle. In the United Kingdom, we have Faster Payment, which are both free and cost nothing. And then in countries like Canada, perhaps we have Interact, where transactions range between $0 to $1 Canadian dollar, depending on the transaction amount. However, whenever transactions begin to become sent across borders, then certain frictions emerge, and then fees appear, significant fees. Right now, on average, the cost for sending money across border, global average fee, is somewhere about 6%. So imagine, if you send someone $100, the person is expected to get about $94. That's a significant cost. Imagine sending money locally here in your home countries, and then 6% of that is lost. That's like an ouch. And then when you think about countries like in sub-Saharan Africa, it even goes as high as 8.5%. One of the big challenges is the problem of transparency in cross-border remittance pricing. So we have a situation now where, because fees have to exist, and because these fees seem to be born out of the cross-border nature of remittances involving currency exchanges, and then a last point of mile delivery, a cost is inherent to that. A cost has to be borne to sustain these activities. However, what then ends up happening is that because these costs now exist, there now becomes the issue of transparency, especially when we think about exchange rates and the fees charged. A lot of, or some services have been advertising that, oh, their remittance services do not cost $0, do not cost any money. They are advertising $0 remittances, free remittances, but the exchange rates are significantly lower than what's obtainable in the global foreign exchange market for the currency pairs in question. And because of they are lower, it therefore means that the recipients of these remittances receive a far lower amount than they should have received due to the lower quoted exchange rates. This is the concept of hidden fees in cross-border payments. And this is a huge problem that therefore makes pricing in remittances an opaque ordeal. So remittance prices become opaque because now there seems to be this freedom among remittance service providers to bake in as much fees as they can into the exchange rates while falsely advertising free or almost free remittance service. And this has angered the Consumer Financial Protection Bureau so that in March of 2024 this year, they released a circular warning remittance service providers around deceptive marketing. But with so many remittance services in the market, it also becomes difficult for you to keep track and know and compare services to find out which service is actually quoting you the best prices and keeping up with the services and understanding whether you are being charged a hidden fee or not. The current nature of cross-border payments with this opacity in the remittance pricing is a problem that draws us back to an era in the domestic banking sector that became alleviated and completely transformed with the introduction of a new technology that many people may have come across in the term of open banking. I think open banking, I believe, is one of the most transformative financial technology innovations in the last decade. This is a framework that allows people, users, consumers, retailers, and financial service providers to share financial data and financial records from one point to the other in a safe, secure, and permissioned manner. It was a groundbreaking initiative which started in the United Kingdom that allowed customers to share records of their financial transactions so that they could easily obtain loans, they could easily get qualified for mortgages, and they could enjoy some of the financial technology services that we have seen emerge in the last decade. These are powered by open banking framework, which is packaged in the form of what are called APIs, application programmable interfaces. Current use cases include payment processing, account authentication and verification, identity verification, and personal and corporate financial finance management, alternative lending as well. And we've, like I said, there will be no fintech without open banking APIs. Open banking had a forerunner, an ancestor, where sharing information was not necessarily permissioned, and there was not transparency in how this information was shared. But with the emergence of this new framework, there has become transparency and there has become regulations guiding how financial data that have hitherto been reserved or been stored exclusively in the servers of different financial institutions. Now customers have now been empowered and the regulators have ruled that these data belongs to the customers, and so therefore they can share this information with other financial service providers because the data belongs to them and not the financial institutions. So let's show you what open banking looks like in action. So here you guys may be conversant with like Plaid. If you're in the United States, you can see it allows you to select the financial institution you want to share your data with. You can see it allows fintechs, financial services, financial institutions to connect to a user's bank. And you can see this is kind of just giving an illustration of how data flows. So a fintech wants to onboard a new customer and it connects to the new customer's bank and it obtains financial data about that customer, which helps it onboard the new customer. But to give you a good picture and a good overview, we have this beautiful infomercial that explains more in depth the concept of open banking.
Open banking is here, an opportunity for people and businesses to use their transaction data to access better financial products and services. Step into an ecosystem, new apps and offerings from fintechs and financial institutions, created to empower users but only with your consent. Perhaps you're paying too much for an overdraft. Authorize a comparison app to analyze your account and find a better fit based on your specific spending. Or bring open banking into your business. Connect your bank account and accounting platform to issue payment reminders, keep records up to date, and spend less on making and receiving payments. Of course, you are always in control over who can view your data. You can manage access at any time. Open banking, the future of money, where you're in control.
And so open banking has now reached across the globe. It was formalized first in the United Kingdom, and from the United Kingdom, it spread across the globe, spread to North America, the rest of Europe, and it's made its way to Latin America and Africa. It is, as we have said, powering a lot of the fintech revolution, which we are seeing, especially in emerging markets like Latin America, Africa, and Asia. And in these countries, there are open banking providers, some of them in different forms, different stages of maturity. But the revolution has peaked and it has now gone across the globe. It's being driven by regulation. That is the fantastic thing about this innovation, is that it has matured to where regulators have now accepted and have formalized and created well-established and clear guidelines on how parties and financial service providers should share and transport financial data from one point to the other. So let's go back to cross-border payments, where we talked about how there was a problem behind transparency, difficulty in comparing services because there were so many services. And so we see that there could be an opportunity to take some of the learnings we have seen from open banking and bring these to the cross-border payment and remittance market. A report from Visa, Visa Economic Institute in 2023 stated that although the average cost across different remittance service operators and corridors were over the 3% target set by the United Nations Sustainable Development Goal, a consumer who was able to shop around would have been able to send remittances at below 3% in cost in 20 out of the 25 corridors that they studied. And this is significant because what it shows is that what we see, effective cost we see today for cross-border payments would be significantly lower if customers could easily compare and choose different or switch between remittance service providers each time they sent money across borders. And as you saw in the previous video, that one of the advantages of open banking was this ability to allow the consumers to have choice and to be able to compare the different choices in the financial offerings that they are being provided by leveraging and using their financial data to optimize and figure out which was the optimum service for their needs. We do now believe that the cross-border payment has become the next frontier for a bigger term called open finance, which is a bigger umbrella that captures this democratization of access to financial data, not just for domestic retail banking, as we've seen with what's been called open banking, but for all financial services, including cross-border payments, cross-border financial services, and remittances. And so, as Visa rightly pointed out, the primary objective of open banking and open finance is to empower consumers and ensure consumer choice. In addition to putting consumers at the heart of the financial ecosystem, open banking should encourage innovation with more players entering the ecosystem to create more tailored and relevant financial products and services. And so what we are proposing in this talk and session is that we take the idea of open banking on the right, which many people may recognize since that has been around for about 4 to 5 years now. Popularly, people have become more aware of it, especially as fintechs have become gaining more traction among consumers. And then we take this idea and we bring them to cross-border payments, cross-border remittance services, as you see on the left. So this framework that organizes the different financial services and different banks and financial institutions domestically with open banking, we take that same idea and organize the different financial services, allow for different players to come into the market, but all organized on this open finance API framework. So let's see some applications of this technology. Let's see some of the things that have become possible because of when you have an API framework in an open banking, open finance setting for cross-border payments. What we see is the emergence of what we call a price line for international money transfer that helps customers to shop and switch between services. So for example, these are customers who are trying to send money from the United States to Kenya, and they can select the amount they want here, and they can filter based on the payment method, whether it's debit card, credit card, bank transfer, and all the services sending to this between the United States and Kenya. They can also filter based on delivery method, whether it's bank transfer, mobile money, or cash pickup. Here you can see they're able to see the best service at the top. So services are ranked with the best service at the top. They can put in their recipient information and they click continue here. And you can see they're connected straight away to the remittance service provider, and then their credentials are kind of managed for them. So the entire transaction happens right here on this platform without being redirected. This is the power of the open banking API framework with cross-border payments. As you just saw, the customer was connected directly to Remitly. And because they connected directly to Remitly, their credentials were automatically filled in and managed for them. And they were able to quickly choose Remitly for this transaction. But on another day, they could have chosen a different provider because, as we know, these exchange rates and the pricing, because there is no standard or there is no rules or regulation around the pricing, different services have different pricing as the days go by and they fluctuate. So now the next day a customer comes in, it may be a different service, like maybe Western Union or TransferWise is cheaper, and the customer selects that service, and you can just see they get directly connected, they are not redirected and having to create accounts and having to fill out login credentials and all of that. That all happens on the platform. But beyond just this idea of allowing service customers to shop and switch between services, these APIs also allow for the democratization and allow for the creation of new business models. And some of these are very significant. Take, for example, cross-border freelancing. Cross-border freelancing is becoming an emerging industry, almost crossing $1 billion, where freelancers in one country provide services to their clients in a different country and request payment. And because the client is in one country and the service provider is in a different country, that means there has to be a cross-border payment. And so one of the ideas that can emerge from an open finance framework applied to remittances is this idea of a cross-border payment request link, which makes it easy for freelancers to request their salaries through this open finance API framework, through these APIs that connect to the different remittance service providers. And so here we show you a demo that shows you how a freelancer in Pakistan, right from his mobile money app in Pakistan, is able to request payment from a client in California. And this payment is all processed courtesy of Open Finance API framework, where we can now embed a service to request payments internationally from within a local mobile money application in Pakistan. So watch.
Hello and welcome to this demonstration of our API integrated into JazzCash, a Pakistani local bank app. Today, we'll walk you through how our technology enables freelancers like Ahmed in Pakistan to seamlessly collect their salary or payment from employers in the United States using Kaoshi's API integrated in their local bank app. Our API ensures secure, efficient, and swift international payments, simplifying the financial lives of freelancers. First, Ahmed logs into his JazzCash bank app. Next, he clicks on the Request Money button, initiating the process to request his salary payment. A pop-up appears, and Ahmed selects Request Money internationally. This option, enabled by our API, allows him to request payments from clients or employers across the globe. On the payment request page, Ahmed enters the amount he wishes to request, which is 84,319.95 Pakistani rupees. He also types in the purpose of the payment as web development fee. This ensures transparency and clarity for his employer. Ahmed then clicks Next to proceed to the next step. He enters the payer's name and email address. This information is crucial for sending the payment request directly to his employer. Once all details are filled in, Ahmed clicks Submit. His employer in the US receives an email notification from JazzCash, facilitated by our API. The email includes all the details of the payment request. Within the mailbox, the employer sees the request content, showing that Ahmed is requesting to be paid through JazzCash. The details include the amount, description, due date, and payment request ID. The employer clicks Pay and is shown a list of remittance services, such as Remitly, Wise, WorldRemit, and Western Union to choose from. This is in line with Kaoshi's mission to empower users with choices and options to choose from. The employer selects Remitly from the list. The employer reviews the information from JazzCash on how to make the payment using their Remitly account. ensuring that all necessary instructions are clear and concise. Employer receives an OTP code, which they enter to verify the transaction. A summary of the transaction is shown, detailing the cost, which is about $300. The employer reviews and confirms the transaction details once more before clicking pay. Payment is successfully initiated by JazzCash on Remitly, ensuring that Ahmed's payment is on its way. Back to Ahmed within his JazzCash app, he clicks the Request Money button and selects the Request Money status option. Ahmed is shown the status of his request, which transitions from payment initiated to processing to disbursed and finally to completed. And that's it. With our API integrated into JazzCash, freelancers like Ahmed can easily collect their payments or salaries from international clients or employers directly from their local bank apps. This seamless process not only saves time but also ensures that payments are secure and cost-efficient.
So you can see that because we have an API infrastructure, we can now embed these services of cross-border payment request linking into local mobile money apps and local financial institution apps in emerging market. Recall, this app is in Pakistan. This is a cross-border payment feature, payment request feature that was embedded into a Pakistani mobile money application. And this is how we engender cross-border finance using this technology. The benefits of Open Finance API for remittances, as you've just seen, is, and to summarize, is that it allows for quick service comparison and switching, as you saw earlier. But this embedded distribution is ideal now that we can then democratize and distribute cross-border payment services and remittances, even down to being able to integrate them into local apps in emerging markets and developing countries. And last of all, one of the biggest hindrances to switching providers is the problem of multiple registration, multiple signing. We've created a single sign-on service, a single sign-on process, a single sign-up process that manages the login credentials for all the service providers, baked into this open finance framework, making it easy for users to switch between the providers as they shop and compare amongst them. So when we look at the big impact, we see that not only have we created a framework that can now bring about a reduction in the cost of cross-border money transfer, as we saw earlier, by allowing people to shop and switch and find the best service in the, to use the term, price line for international money transfer. But we have now fostered international e-commerce and trade when we take an API framework and embed this into local financial institutions in emerging markets and developing countries, are opening the freelancers and small businesses in this emerging market to a large global market where their services can now be sought after across the globe and they can now get easily paid. All of this brings about democratization of cross-border payments, making it easily accessible. That is all. And that's the power and the significance of bringing an open banking, open finance framework to cross-border payments. We solved the problem of transparency, eliminated opacity in pricing, and as a result, we have unlocked international e-commerce and trade, which finally results in a democratization and fostering of financial inclusion, in this case, cross-border financial inclusion. Because now we are now including people in emerging markets in the developing world that have been previously cut off due to distance, due to the lack of a framework like this that can allow and make it easy for them to market their services to clients across the globe and still get paid with the click of a button from their local financial institution apps. So thank you so much for your audience. I'm Chuki. I do have a background in theoretical physics, that open banking and open finance nerd, and very passionate about open banking and open finance and bringing this framework to cross-border payments. And I was supported in preparing this presentation with my partner, Obina Agba, who has who's a veteran engineer and at Adyen, and has a master's in computer engineering from Delft University. Together, we explore and think about ways of incorporating the great work that has happened with open banking and bringing that to cross-border payments and remittances. Thank you, and I hope you have a wonderful experience with the rest of the sessions happening at the Financial Inclusion Week. Thank you once again.